I don't know what you're hearing. This seems to be one of the most divisive things I've heard of on Wall Street. So we have some people like the Wells Fargo trading desk. They go, it's literally the worst thing in the world. And you talk to other traders, they go, it's not a big deal. In fact, we had Carrie Firestone here on the show, and she said she actually thought it might smooth out trading during the day. Where do you stand? Does this increase volatility? Does it lower volatility? How does it impact investing?
I think a great question, Frank. And there's going to be, until this rolls out, we won't fully know. But I would call myself on the supportive side. When I was chair of the Securities and Exchange Commission, we already had found, starting in 2021 and 22, there was trading. Robinhood, you mentioned. Their users wanted to trade sometimes at 1 o'clock in the morning. And you might say, well, I'd rather sleep. Oh, well, and but I think that for those that want to trade, it's a good thing to get greater transparency. And so let me just say this. How does it happen now? Robinhood sends an order to something called Blue Ocean. Most of your viewers don't know Blue Ocean. It's called an alternative trading system. It's one of 4 or 5 of these things. And you send that order to that. There's not much transparency. So when I was SEC chair, somebody came in, it was called 24X, and asked to register with the SEC to create an exchange. And those exchanges will do something like the tape, you know, when the prices are coming across the screen. I think that's a good thing for the investing public.
All right, so you do see some upside. You're not on the camp of it's the worst thing ever that happened to the stock market or Wall Street. So you're seeing the potential for some upside.
I see another piece of upside actually right now, and there's an academic study that was out that 80% of the volume overnight, and it's thin. It's not a lot of volume. It's less than 1% of the overall 24-hour volume, but 80% of it's coming out of Asia. Half of that 80% is out of Korea. You know, I was with the dentist the other day when you all reached out to have me come on this, Rostami, my dentist, and he asked me, he said, Gary, why are you going on TV? What are you talking about? And I told him, and he said, why do people want to do this? And I said, well, some people want to do it. Why should we say no? But 2 things are happening. One, we're helping them get better transparency, better regulation in the overnight session.
Okay.
And 2, those Asians that want to trade during their daytime can trade the big names of America. And isn't that good for those American companies that those Asian investors who want to trade can do it in their daytime?
So there's an upside for those investors. But I want to ask you, what's really the downside for U.S. investors? Because as you mentioned, people can already do it on Robinhood. They're already doing it. Why not just open the exchange for that quote-unquote night session and let people do it right there on the exchange? And like you said, it would increase transparency. I think the other question is about liquidity. Do you think it would increase liquidity in those overnight hours?
Well, interestingly, and again, it's just some recent academic studies, but they say that there's not great liquidity in the middle of the night. That means the bid-ask spread is a little wider, but it actually tightens up and helps the open in the morning. So remember, at 9:30 in the morning, the big core session happens. That's where 90% of the volume is, between 9:30 and 4 o'clock in the afternoon. And it will probably modestly, this one study says, maybe help in the morning. Look, it's about investor protection. Okay. And some people rightly worry, look, are we moving more to sort of trading in the middle of the night, day trading, now night trading, addictive trading, and all academic studies show, all economics show, the more you trade, you lower your average returns. And so rightly, people are saying, what about investor protection? And I look at it, and I voted for this last November as well. I look at it and I say, investor protection net goes up with greater transparency, greater surveillance. That's a good thing. We have to recognize that there's some risk that some greater people will trade in the middle of the night and burn.
But Gary, in all fairness, there's risk in the middle of the day. If you trade between 9:30 and 4, there's still some risk. I want to ask you about one other topic. We're looking at Coinbase this morning. Those shares are up about 3%. Coinbase, the latest company getting in the prediction market. How are you viewing the prediction markets? Do you think there needs to be specific regulation around them?
Look, it's interesting. All capital markets have a feature of prediction. We predict a price of a stock or its earnings, economic predictions. We predict the price of corn or wheat, and that's important for farmers and merchants to hedge their risk. I think that there's two issues. One is it well regulated with transparency, and we protect against fraud and so forth? And two, and this is a long-held view, is if it's hard to ensure for the integrity of the market, and it's harder to ensure for the integrity in things around sports and around politics, and it's trickier, and so I think that it's really important to make sure that we don't undermine either our political system or our sport system in these prediction markets, but we have to recognize we have prediction markets for weather events, and that's probably a helpful thing for people to hedge severe weather risk.